Dan, welcome to the show.
Thanks for having me. Good to be here.
So, Dan, we are going to chat about a few things today, but I think the main theme is this idea of Bitcoin narratives, and are they dead or are they just delayed or postponed, perhaps? But for anyone who doesn't know you, can you just give us just a brief overview, your history in the Bitcoin world?
Sure. So I guess I first stumbled across Bitcoin from a Slashdot post when it crossed $1 in 2011. Ignored it like everyone does on their first discovery, and then rediscovered it a few months later when the price was going nuts in that 2011 bubble, and that's when I kind of did my homework and really, discovered that this was something I needed to pay attention to and something truly unique. Um, anyway, so fast forward to 2014. I was co-founder of Digital Currency Council, which at the time was a professional network educating people on Bitcoin. There was really nothing else. I think in all our education materials, I had like one slide on these things called altcoins, but it was really all Bitcoin. Then that business was basically a victim of the 2015 bear market. 2017 rolled around. I created on-chain effects to kind of get more fundamentals data out there in the space, because that was an area of all these ICOs with these crazy supply schedules that nobody understood, and people are kind of getting taken advantage of by all that. So it's trying to get better information out there so people could make better decisions. And ended up rolling that into Masari. So I'm a co-founder of Masari. And yeah, that's what I've been doing for the last few years.
Excellent. And so what we're seeing now is what we've seen many times before in Bitcoin's history. So perhaps it would be great to hear a little bit of context from yourself on big Bitcoin drawdowns historically. Yeah. What did they look like before, and what does this one look like now, and how does this one compare historically?
Sure. Yeah. So I guess my first Bitcoin bear market was the 2011 bear, when we went from high of 32 in June 2011 to less than $2, $1.91 I think in November 2011. So less than 6 months we were down 94%. So that was pretty brutal. It's funny. I still say that was the worst bear market. Maybe it's because everybody's first bear market is always the one that they think is the worst, because they've never seen it bounce back before, right? So it takes. I think for most people, it takes seeing it go, just get so clobbered, and then coming back with a vengeance, a year or two later, whatever the case may be. It takes that for most people to really have the conviction. Anyway, that. At the same time, there are unique factors to every bear market, but in that one, there are only 30 or 40,000 anons on Bitcoin Talk that really cared about Bitcoin at the time. There was no mind share in in the mainstream, in kind of anyone who mattered in kind of traditional finance or VC or anything like that. So it was more conceivable that the world could just kind of forget about Bitcoin for a while. We all kind of knew that this technology was here to stay. This idea was too powerful, but it seemed like it could be on the back burner for a long time after that drawdown. But that's not what happened. Then recovered in 2012. 2013, Bitcoin basically had two bubbles over the course of the whole thing. It did 100x. It started the year at 11, and it hit 1163, I think, on Bitstamp in December that year, in November. So that was nuts. And then that was a couple months later. I mean, there were warning signs for Mt. Gox for months prior to that, but a couple months after that peak is when Mt. Gox declared bankruptcy. And then that was just kind of like a bomb in the space that just destroyed sentiment for a couple of years, really. So, if you were to draw an analogy, I'm starting to feel like, with all these, lenders blowing up and, centralized institutions on top of Bitcoin, there are some similarities there where these, centralized entities that use the Bitcoin network that, basically have, taken control of people's Bitcoin and, not treated it too well. There's some some analogies there with the Mt. Gox blow up, but it's not. I wouldn't say it's anywhere near as severe, at least yet. Because Mt. Gox, when it blew up, was 80% of the ecosystem, was 80% of trade volume. It was kind of the hub of the whole space. At least as far as like the centralized activity goes. So yeah, I mean that was
Sure.
So yeah, that was that was probably a
Yeah.
lot of people would say that was the worst one. Yeah.
Yeah, for sure. And so it's interesting because comparing Mount Gox's fall in late 2013, early 2014, as you were saying, that was the only game in town. It was
Yeah.
maybe 80% of the game in town. There were some smaller exchanges. Bitstamp was around then. There was that Russian one, BTCE, and Kraken was around as well. But again, they were a lot smaller in those days. At least that's my recollection. I'm a 2013er, so
Definitely.
I've lived through some, but not as many as you. And so then comparing to today, if let's say a large exchange, something similar were to happen to Coinbase or Binance, right? Even then, it would still not be as much as what happened with Mt. Gox back in late 2013, early 2014.
Yeah, in terms of trade volume, that's true. So I would say probably though, if Coinbase blew up, which I do not think is in the cards, never say never, but that's highly unlikely in my opinion. That would, from a sentiment perspective, that would probably be as brutal as Mt. Gox. So it'd probably have to be an event like that to be kind of similar magnitude, at least in terms of what the sentiment toward the space would become overall. I think, even if trade volume is more distributed nowadays.
For sure, yeah. And so in terms of the numbers, right? And I know you've shared some statistics on Twitter as well, and people were talking about it. But in terms of 80% drawdowns, it seems to me like there have been at least 3 in Bitcoin's history, right? The 2011, the end of 2013 sort of drop, and also the 2017, 2018 cycle. That was an 80% drop there as well, because we went from like 20,000 down to, I think at the absolute bottom, December 2018, it was like 3,500 or something like that. So we went under 4,000, which is 80, which would be the 80% drop mark. Now, there have been 3 80% drops in Bitcoin's history. You've lived through 3 of them. I've lived through 2 of them. But not just that, there have been multiple 50% drawdowns. And even this recent one, if we're going peak to trough, we're saying roughly 69,000 last year. And the absolute bottom of this recent go around, it seems, was around 17,000, call it 17,300-ish, which is about a 75% drop. So it's not even an 80% drop.
Yeah, exactly. And there's a huge, so actually those 80% were higher. And there was actually another one. I kind of counted as 4, because the spring 2013, we went from 266 to 50, which I think is, 81% drop. And then, so like, people count 2013 as one bull market, and that's fine. But like, technically we have had 4 80% or more drops. And the,
oh, good. Okay.
The other one, we've had, I think, 81%, 84%, and 87%. And like, the difference between 80% and 87% doesn't sound like much, but it's, it's almost another 50% drop once you've already been down 80%. So that, that gets brutal. But yeah, that's not where we're at right now. So it's interesting. Like the thesis on the way up was that, now we really do have institutional involvement. And so, maybe, instead of getting, excessive FOMO like retail does, like maybe they will, rebalance their portfolios on the way up and, kind of attenuate the, the parabolic spikes that we've traditionally seen. And, we didn't see that this cycle. So maybe that, that wasn't effective, the institutional buyers. So we'll see if the same is true on the downside. Like maybe there are bigger pools of capital now who have a fundamental view on Bitcoin and are willing to jump in and not be so so not feel the despair like like retail does at the bottom of bear markets. So we'll see. But we did have, in 2020, Paul Tudor Jones, even Stan Druckenmiller, a bunch of others that came out with what I would say is the right thesis on Bitcoin, that it's a hedge against against excessive fiat money printing and the kind of necessary long-term fiat dynamics, right? Like we are in this period right now where the Fed is tightening, where one of these brief, I think, periods where where fiat isn't expanding. And but if you look over these longer time frames, kind of the math just says that these the Fed and other central banks kind of do have to inflate the debt away. They're going to have to print more money. The money supply is going to have to increase, and these things have been historically very bullish for Bitcoin. So maybe some of these higher capital entities that came in 2020 have that thesis and can put a higher floor on the downside. But we'll see. TBD.
Yeah, for sure. And as you were saying, I think it is about having that fundamental viewpoint and stepping back and thinking, well, what other ways is the fiat system going to go on, and how else does it carry on other than with more inflation eventually? Now, of course, that may not happen straight away. And of course, that the big question on most people's minds is, if the Fed is going to pivot, when? Is it going to be late this year, early next year? I mean, who knows, right? But I think that's the fundamental question that anybody has to think about when they're thinking about Bitcoin. Now, I think the other point I really wanted to ask you about as well is this common narrative, and let's say it's been a talking point, is this idea that every time Bitcoin has gone through a cycle, it has never gone below the prior all-time high, right? That's a common, let's say, talking point or narrative. Now, what's your reaction to that?
Well, so again, it's how you count the cycles. So that spring 2013 run where Bitcoin went from 11 to 266 and then had a negative 80% drawdown, and then kind of flatlined at negative 70% for months. That certainly felt like a full cycle, right? So, and we kind of counted it as such at the time. So if you count that, then that high was 266, and then fast forward to the next cycle, which is the end of 2013, where we hit 1163, and then a little more than a year after that, we hit a low of 153 or so on Bitstamp, I think. So that was which was below that spring 2013 266 from that cycle. So these are I don't know. I don't know if there's a ton of rhyme or reason to exactly what the peaks are and exactly what the troughs are. So yeah, it is. People have have had that narrative about cycle all-time highs never being breached, but I don't think that's true if you're counting cycles like I am, and there's no reason that should be a hard and fast rule anyway. I think what's important to focus on is just the long term. You're looking at 5-year returns,
fundamentals.
Yeah, exactly.
Of course. And so, yeah, as you rightly said, and so for me, living through that 2013 double cycle, if you will, the first one, the narrative at the time was the whole Cyprus bailout. So that was the big narrative. Oh, Cyprus are doing this bail-ins and watch out. And that's, in the narrative. Now, of course, narrative and reality are different. The narrative was sort of that, the Cypriot people are buying Bitcoin, but in reality, it may have been more like a kind of, that was part of the narrative, and there were people outside of Cyprus who were just buying Bitcoin because of that narrative, potentially. And then who knows? I mean, historically, people look back and say, "Oh, that was the reason for this," right? So the other big reason people are saying is, "Oh, Mt. Gox is going under," and they had this Willybot, and Willybot was pumping the price by, that was the narrative, right?
Yeah. I mean, that's a funny one because there were so many people at the time who were saying, okay, after that price peak and then crash, that 1163 price peak, people were saying, oh, Bitcoin could never have gotten there without Willybot and will never break 1,000 again because Willybot is dead now. It's like, all right, well, clearly proven false. People are always looking for easy reasons, and markets are complicated, so the easy reasons are usually wrong.
Of course, yeah. Now, the other point that's been also a common talking point, and maybe this narrative is now gone, is this idea that a person who bought Bitcoin and held for 4 years or longer was never in a loss. And historically, up until recently, it used to be true that if you held for 4 years, the minimum you were up was, I think, 3 or even 5x on what you would put in. That was historically true. Now, of course, if we cherry pick the exact dates, let's say I bought close to the top of December 2017 at 19,600.
Right.
And recently, if you held for 4.5 years, you at one point would have been underwater because the prices call it 17,500. So that narrative is now broken because you could have been holding for 4 years and been down. So I'm curious your thoughts on that and the breaking of that narrative. Does that mean anything, or again, not really?
Yeah, I mean, so I've always I advise taking at least a 5-year view. I've personally always taken a 10-year view. I remember when I first kind of, got involved with Bitcoin, I was like, all right, let's see what happens with this over 10 years. Like, it's going to take time and it's going to be volatile. Like, you can't bootstrap something that could be a new global reserve currency for the digital era, like, without a ton of volatility. You're not going from, zero to tens of trillions uh, without some like pretty crazy price action. And yeah, different sorts of macro environments last for many years. So Bitcoin is now a macro asset. Kind of, I think 2020 really kind of transitioned to, I would call it a global macro asset. So that means we are going to be exposed to these macro cycles, and they can last years. So I would encourage people to really do their homework, really understand Bitcoin's potential, have a price target in mind based on fundamentals, and have a long term view. Ideally 10 years or more, definitely at least 5, and that's kind of the more reasonable benchmark in my opinion, given the volatility that's inherent in a process like this.
Of course, and I totally agree with you there. I think perhaps another criticism that could be leveled, and again, it depends on who people were listening to, but this idea of if people were listening to that talking point of the 4 year, so on, then people could say, well, aren't you Bitcoin guys? You're just changing the goalpost now. You're saying, oh, it's now 5 years, or now it's 10 years, right? But of course, it depends who you were listening to, right? And what was your fundamental thesis about this thing, and what you view the long term of Bitcoin being. How long do you think it's going to take to become, firstly, let's say, kind of in the same realm as gold, let's say 11 or 12 trillion as a total market, and then eventually someday global money, maybe that's M3, right? About 100 trillion, maybe 110, 120 trillion worth, but maybe that's decades away. We don't know.
Right.
So, I think and it's probably. I think it's also fair to point out that while a 4-year hodler could be down if you cherry pick the dates, if you were a 4-year stacker, like if you were regularly stacking,
Yes.
I don't believe you were ever underwater.
Yeah,
Or
I've
not,
been meaning
as
to
in you
do
were
that.
underwater once you had been stacking for 4 years. Yeah.
Right. I've been meaning to do that analysis, but I haven't. So I have on casebitcoin.com, I have some of these like long-term ROI charts, and the 4-year ROI right now is still plus 200%, whereas gold and the S&P 500 are both 40 something percent. So still substantial outperformance if you just look this date 4 years ago. So that's obviously not cherry picking the exact high. But even so, it's conceivable that those 3 and 4 year numbers will go negative at some point. If we go into some severe recession and liquidity crunch, and the Fed's still hiking and rolling off the balance sheet and all that, like it's conceivable. But I think that's got to be in your range of possible outcomes. And if if you hold the asset for the right reasons, and you have a fundamental view and a target in mind, that you're really understanding the asset, I think, is what gives you the conviction to hold through these periods. And if you don't understand what you own and you are getting scared, well, maybe you shouldn't own it until you understand it better.
Yeah, for sure. And I really like that website, casebitcoin.com. So perhaps you can just tell listeners a little bit about it and what they can expect to see on casebitcoin.com.
Yeah, so it's a site I put together in 2020 really to kind of lay out the case for Bitcoin as more and more kind of traditional finance people and even retail was just getting interested in Bitcoin. So I try to collect. It's a mix of quantitative and qualitative stuff. So I have a library of some of the key kind of articles, blog posts, Twitter threads, etc. on Bitcoin from over the years that really give you a good framework for understanding it. Yeah, and then a bunch of data about its performance as an asset. So just basic stuff like ROI, and then some like risk adjusted returns and Sharpe and Sortino ratios and things like that. And then just a bunch of other kind of health stats on the network and the asset. So yeah, it's funny. I feel like since I created that, like people do understand the case for Bitcoin a lot better. It's just there's more information that's gotten out there in the last 2 years, and I think a lot of people that did come in 2020 do kind of understand the fundamentals. So yeah, the site is in dire need of updating, but yeah, still a lot of good data there, I think.
Yeah, for sure. I think things like the CAGR stats are also interesting for people to see and just compare and say, okay, this is what Bitcoin did over 10 years on a CAGR basis. So CAGR stands for compound annual growth rate. And as we speak today, it's end of June 2022, and that number is about 120% on a 10-year basis. Now, of course, if we looked at that number on a 5-year basis, it would be very different, but it's still interesting to get some perspective. Now, of course, personally, I anticipate that to taper down over time. I'm not expecting that to stay 120% every year. It'll probably taper down. And if you were looking at, say, the medium term, I've spoken with my friend Has McCook as well, and his suggestion is something more like 60 to 70% is sort of more like a medium term. You could see
Which
it
is still
achieving
insane.
that kind of level.
Yeah, I mean, there are very few assets in financial history that have had a 10-year CAGR of even 60%. And like you said, Bitcoin's is 120% right now. Even the 5-year looks like it's 51%. And look at gold and S&P are both single digits. So I mean, and that's 50% versus 8% is in a 5-year CAGR is huge because that's compounding over 5 years. So yeah, there's no arguing with the past performance. I don't think. I agree with you that now that we're a bigger asset, it can't grow as fast forever. But this is back to like what you think the ultimate upside is, right? Like it seems it in my own kind of mental model, it's like, okay, well, I mean, an easy comp is gold at something like 11 trillion. Today, and that's more than a 20x away. And yeah, you can make arguments that the Bitcoin ultimately sucks in more more store value demand outside of what is in gold, and specifically from bonds as as government bonds, which I don't know how many hundreds of trillions are probably in government bonds globally. But yeah, as as we get into an environment where bonds look less and less attractive, yeah, that capital is going to seek another home.
Another question that people are being asked is this question of, is Bitcoin no longer an inflation hedge? Or was it ever an inflation hedge? How do you consider that question?
Right. So that's an interesting one. And I think, at least, so I think that's a sloppy term, basically. There's debasement and there's inflation, and they're two different things. And, I've been guilty of kind of using them interchangeably in the past before. I think a lot of people have, and that unfortunately has contributed to this like kind of simple idea that people have that, we have CPI prints, above 8% now, and Bitcoin is, has been performing poorly over the last few months. Therefore, it's not an inflation hedge. It's like, well, okay, let's be a little more specific. Like, Bitcoin has responded, I think, phenomenally well to monetary debasement. To when the Fed, announced QE, printed $5 trillion in 18 months, more than doubling the size of the balance sheet. But just unprecedented money printing. Bitcoin was, to quote Paul Tudor Jones, the fastest horse. And debasement and inflation are often related. Like, debasement leads to inflation. But the thing that I would expect Bitcoin to respond to is the debasement, not specifically the CPI inflation when that comes around. So I would look at like what central banks are doing, like what their money supplies are doing. Bitcoin as the world's first credibly fixed supply monetary asset, like that is in direct contrast to what central banks do. So, I would expect it to respond to what central banks do fundamentally. Whereas CPI is, a downstream effect, and central banks can be doing other things when CPI prints get high, which is exactly what we're seeing now.
And while we're on this point, it's probably worthwhile pointing out the Austrian conception of inflation is the money debasement part of it, whereas nowadays the Keynesian or statist definition of inflation is more around what CPI is, and they conflate the two. Whereas an Austrian economist is looking at it more like, no, that's money supply inflation is inflation, and that has a downstream impact of purchasing power decrease, which is what the mainstream economists will call, that's CPI, that's inflation in there. And so in their mind, so it's actually useful to tease out that distinction. And in a way, that's actually what you were just getting at as part of your answer on the inflation hedge, because as you rightly pointed out, a lot of the government money printing was done 2020, 2021.
Exactly.
And so even though we're getting high CPI prints now, a lot of the money printing was already done, and that was when Bitcoin already went up. So I think that's probably a fair point for people to understand or appreciate. But even there, it's perhaps not a fair expectation to say that Bitcoin must immediately respond to every little thing, because I think what we see now is this kind of modern news culture where they say, oh, look, stock market is down because of this particular news item or news so item A or B, and it's not always like that. There's not always a reason or rhyme to it.
Yeah, totally. You will see it takes some time for for the moves to have more clarity. But another thing to point out is if you look at how Bitcoin has performed from the start of the 2020 QE until now versus other assets that also responded well to the liquidity. Bitcoin is still up something like 3x, I believe, from when the Fed announced that QE in March 2020. And the kind of poster child for for tech growth, the ARK Invest's ARKK ETF has also responded very well to the liquidity and went up multiples, but has since fully retraced and is now below those levels in March 2020, whereas Bitcoin is still sitting there at 3x. So over the full cycle, that's still massive outperformance, and Bitcoin is still beating commodities. It's very much beating gold and the S&P overall. So yeah, I think Paul Tudor Jones was dead on with the fastest horse comment.
For any listeners who are going through their first bear market, do you have any tips for them on how to get through the bear market?
Yeah, I guess a lot of what I've already said about just like really doing your homework and understanding what you own. I think this ties in with position sizing. Make sure what you can tolerate the volatility, that what you put into Bitcoin isn't money that you're going to need to live anytime soon. This is again not investment advice, and everybody's situation is different. So I would really think through your own situation and your own risk tolerance, and your own volatility tolerance, I guess I should say, and understand what you own, and that at least in my case has given me the conviction to hold through the bears.
Yeah, for sure. And in terms of, let's say, Bitcoin FUD, right? So what we see is it seems to come back in cycles, and there are certain ideas and items that just come up every time. And some of these are just items that a new coiner or a pre-coiner might be thinking, oh, but what about X, Y, and Z? And I notice sometimes there is a slightly different flavor in the FUD, or over the years, there's a slightly different idea. But I'm curious if you have any thoughts to share on Bitcoin FUD and how it has sort of changed or evolved a little bit over the years.
Yeah, it's interesting. It actually, I was thinking about this the other day. It actually has evolved substantially. We have laid to rest prior FUD that thankfully hasn't really reared its head again. So like some early ones were, you still see this a little bit now, but like the quote, Bitcoin has no intrinsic value, is the thing people like to say. It's like, well, that's a misunderstanding of like where value comes from. I think, most, Austrian economists would correctly, in my view, said, refer to the subjective theory of value, that value for anything comes from its use or demand from certain humans in certain contexts. Like there's nothing intrinsic about value. Gold bugs get this wrong, I think. And anyway, I think people now understand Bitcoin's value proposition more fundamentally than just like saying, oh, because it's digital and you can't touch it, it has no value, which was a thing for years. Kind of another one was people asserted a lot early on that like Satoshi there's no way he didn't put a backdoor in this thing and wasn't gonna like come back and steal all the Bitcoin or whatever. Like it sounds ridiculous to say now, and it was then for anybody who understood the network and the nature of open source and so forth. But that was some FUD we had to deal with for a while. So like now it's like, it's funny, like the FUD it's almost more political. I think one of the most aggressive ones is the ESG stuff, the assertion that Bitcoin is some like environmental disaster. Like we saw a little bit of that years ago, but it's really in the last like 1 to 2 years has just gotten ridiculous. And I mean, that one is the one that annoys me the most now. It's just like so pervasive and really actually does matter. Like unfortunately, people who maybe haven't made up their mind on Bitcoin, like do hear these things, and it does matter to them. So I think it is important that that we all combat these bad ideas. And just as like one quick way to point out how silly that is, I think Daniel Buckner has done some like back of the napkin math on Bitcoin's energy use relative to some other like common things like clothes dryers, for example. Bitcoin's energy use, clothes dryers use 15 times more energy globally than the entire Bitcoin network. And then another one he's calculated is the emissions due to food waste. So just like wasted food that ends up rotting in trash cans or whatever is 60 times the emissions that the Bitcoin network puts out. So I mean, if anyone is like saying Bitcoin is destroying the planet and all that stuff, they're either ignorant or politically motivated, I think. And so that's a little tour of a few of the FUD items over the years.
Yeah, sure. And I think the other interesting one is dealing with ESG people. It is, some of them will latch onto a certain narrative. So they may see something from a certain Dutch central banker's blog as an example, and then latch onto this and say, see, here's a research item showing this. But I think maybe one other item that may be pulling people back to reality now is what's going on in the world with energy today. We're now seeing certain nations who are previously were very, oh, look how renewable we are, we don't do fossil fuel. And now all of a sudden, with the crisis going on with the Russian war and so on, now they're saying, no, actually, for example, Germany is coming and turning back coal back on. Or another statistic I could share is that I understand from what I'm seeing on Twitter, at least in Australia, there's more people who are not so hot on the whole net zero agenda because they are seeing an energy crisis and they are starting to think a little bit more rationally about energy. And hopefully that is something that we can convey to people as well. Because here's the other thing. We're both bullish on Bitcoin, obviously, and many listeners are too. And so we believe the energy usage is going to go up. So while Bitcoin right now is less than, say, the dryers or the food waste, we don't know what that could be in 10, 20, 30 years' time. It might well be more.
Yeah. So there are two sides to this. So yes, the usage will probably go up, but I don't think it shouldn't go up linearly with price due to the halvings. So if you look on multi-decade timescales, and this does get fuzzy, like way out when when transaction fees become much bigger relative to block reward. But for the foreseeable several decades, Bitcoin should scale sublinearly with price. Um, so in terms of energy usage, and it's funny because like everyone looks at energy, but what really matters is emissions. Like that's what we care about, in terms of environmental impact. And Bitcoin, you know, has these unique because the energy Bitcoin consumes can be consumed anywhere. It's location independent. It doesn't need to be next to big population centers. Um, the energy is it. Bitcoin miners migrate to stranded energy resources, which tend to be renewable. A lot of hydro, because it's cheaper. Because those producers don't have another ready market to buy that energy. And then you have things like nat gas flaring, which is a big part of miners expanding to mine on otherwise flared natural gas, which actually, when you plug a Bitcoin miner into those systems, it actually reduces emissions. And there's enough flared natural gas in the United States alone to power the Bitcoin network. So, like, when you look at these two factors of scaling sublinearly with price and the incentive for Bitcoin to be mined in ways that are cleaner than the grid overall. I mean, it just makes the kind of ESG FUD arguments all the more ridiculous.
Yeah, for sure. I'm also curious, are there other angles that have not yet been explored or maybe are not as prominent now, but maybe in the future? So maybe one example would be this idea of inequality. So this idea that, oh, look, all these early Bitcoin people, you had it easy. Even if you had to hold through 3 or 4 80% drawdowns, it won't look like that to them in the future in 5 or 10 years' time. Do you think that is another angle, this inequality line of attack?
Yeah, I mean, I think we'll definitely see that. I mean, I feel like that's started to happen already, and it's funny because I remember a post from I think Rasa on Bitcoin Talk from like 2013 with that bubble. With you like had this long post about predicting that this was going to be a line of attack in the future. That all the early Bitcoiners got lucky, and that's how unfair that is. Blah blah blah. But I don't know. I mean, I think the counter argument there is just like kind of acknowledging the nature of markets, right? Like these cycles are massively redistributive in their effects, right? Because early Bitcoiners are when the price goes 100x are going to want to cash out some amount, and people who don't understand it are gonna sell in the bear markets, and I don't know, so it's just this massive redistribution pressure towards new holders over time. And we do see the Gini coefficients going down over time. It's very noisy data, but I think you can draw that trend. And yeah, then the obvious comparison is like, okay, so there, that's Bitcoin in a vacuum. But what are you comparing it to, right? Like you're comparing it to fiat, and you're comparing it to central banks, which buy trillions of dollars of bonds from banks in QE, which I would argue QE is likely the kind of the steady state going forward for many central banks for the next 10, 20 years. And, sure you're familiar with the Cantillon effect, where, it really matters who gets the new money in a society first, because they are able to, spend it to buy real, hard assets before that money trickles down to less fortunate people in society. So, where the Fed and other central banks, like their mechanism for injecting money into society is usually through the banks. Clearly that's going to cause like financial assets and therefore people who hold a lot of financial assets to gain wealth first, and everyone else at the bottom is stuck bearing the ultimate inflation that results from that without much or any of the benefits. And Bitcoin does not have that dynamic at all. So you really have to look at its structure in comparison to the alternatives too.
Of course. And speaking of alternatives, there are probably many investors right now really stopping and thinking a bit more about what they are currently allocated to. So right now, it's obviously very common, people who are not really thinking about it, or they just take the default. They're pension fund is putting them in a whole range of different things, or maybe their financial advisor just has them on 60-40 stocks and bonds. And 60-40 stocks and bonds is literally having one of its worst years on record.
Right.
So we're in this environment where people have to really stop and think, what am I fundamentally choosing to hold? So if you had to think which markets are most likely to be gobbled up by Bitcoin, or let's say holders of this other asset may defect over to Bitcoin, what would you say are the most likely?
Well, I mean, I just look at government bonds as a huge pot of money that can end up, some percentage of it and end up in Bitcoin ultimately. Like Bitcoin just stands in such sharp contrast to the dynamics in the bond market, and I think what are long term dynamics in the bond market. Like if you look at Japan, right? Like their debt to GDP is well over 200%, I believe. So they're in this position where they can't raise rates. Otherwise, it basically causes the government to default, because interest expense just becomes like way too high, eats up all the tax revenue. So right now the Central Bank of Japan I think they pegged the 10-year bond at quarter percent, so 25 basis points. And how do they peg it? Well, they print more yen to buy bonds. Like whenever bondholders sell too much, to causing that yield to go higher, the central bank has to step in and buy those bonds with freshly printed yen. It seems like Japan is the farthest along in this dynamic, but if you just look at like the debt to GDP numbers of other nations, U.S. being the most obvious, it's like we're a few years behind them, and those dynamics seem like it has to happen here as well. So why would you own bonds when when they're basically going to get paid back in massively devalued currency? So you will, a bondholder, will get their nominal rate of return, but that purchasing power is going to be, vastly devalued. So, it's like, where do you put your money? Like, so, these holders, if they have the flexibility to move their capital somewhere else, I would think they'd be looking more deeply, especially at hard assets, and especially liquid hard assets, and that's Bitcoin.
And adding to what you were saying, one other idea I've heard from, I think, a few macro guys, basically there's this idea of the Japanese widowmaker trade. And so basically the idea was the trade was to short the yen, but it was known as the widowmaker because for such a long time, people who were trying it failed. But it seems like now the people who are trying the widowmaker trade are actually profiting from that. And so it may be also, now that that's actually starting to occur, we're going to see more of a defection from people who are holding bonds, at least the ones who are holding voluntarily. Of course, there are some institutions and some parties who are holding bonds because they have to, for some regulatory reason, some capital reason, some some other reason where they have to. But the people who are doing it by choice, they could at least start with a small Bitcoin position. So I think that's probably a very likely scenario. I'm curious if you were to compare Bitcoin with other asset classes, so property as an example, or maybe even just cash. How would you compare from a fundamental point of view? How would you compare Bitcoin versus other asset classes there?
Yeah, so there's certainly other limited supply hard assets. I would call them real estate, gold. Like there are a bunch, even stocks to a certain extent that that should be a bit of a debasement hedge alongside Bitcoin. But I think one of the things that's like fascinating about Bitcoin that is really still quite underappreciated is it is the only financial asset you can actually own, like that you can truly own without any relying on any counterparty for you to have title to that asset. Like when you buy real estate, you're relying on whatever government runs the jurisdiction you bought that real estate in. Their court system is basically what guarantees your title to that asset. And with gold, like okay, like you can bury some in your backyard or whatever, but like if you're trying to like cross a border or when things get politically difficult, it's much harder to actually get real transactional utility out of your gold than it would be for Bitcoin. So I think that's especially as as things get more heated politically, we have increasing polarization in the U.S. I think reasonable people are kind of worried about extremism and authoritarianism on both sides of the political aisle. In environments like that, like something that is completely unreliant on the political system, for your ownership of it, and that there's real attraction there. That I think is still quite underappreciated, but yeah, it might be entering people's minds more and more.
Of course. And so there are scenarios where, as an example, in Australia, there was a recent case shared by my friend Katan. He was talking about how various apartment owners were being mandated by the government that they weren't allowed to do Airbnb on their own property. And so in a similar way, it's like these physical property that you're holding, it can be severely restricted in how you use it or monetize that. And so that could be really impactful for you if you're a physical property holder and then the government rezones it or does something to your ability to actually use that property. And so that's an example there where, in Bitcoin, that just doesn't happen. Of course, Bitcoin is not totally immune. Of course, Bitcoin is still a little bit at the whim of what's going on with central banks. But I think as we were establishing earlier, there's this fundamental reason that central banks are just going to have to expand their balance sheet, even if they're making these overtures right now about lowering their balance sheet or trying to lower it. Right? If we, I'm also thinking back to Christine Lagarde's comments about, it will come in due time. It will come when she was questioned about the size of the ECB balance sheet, and so I think these are all points that are interesting for people to bear in mind. So I guess at this point, any listeners who are, I guess, wanting advice from you, you're a long-time Bitcoiner, do you have any thoughts to close out for them on what to do, how to go about the bear cycle or the sideways cycle or whatever we're calling this?
Sure. I mean, I guess first thing is just realize this time is not different. Like it is, this has happened, 4 times before. It always, it feels like, sentiment shifts, and I mean, obviously sentiment shifts, but it feels like, the world fundamentally changes its attitude toward Bitcoin. And there's some truth to that in the short term, but, the Bitcoin ecosystem gets stronger, through the bears every time. I would recommend, it's a good time to kind of get your house in order in terms of are there aspects of the ecosystem you don't understand? There are arguments for or against the asset you don't understand. So just understand things better fundamentally, and also learn the technology and tools better. Learn how to safely take control of your keys. With this comments we just made about Bitcoin being this unique asset that you can fundamentally own. In contrast to everything else, you have to actually take control of your keys for that to be true. So I would recommend deeply understanding that, so that you can have proper cold storage. Maybe you have some cold hot system, keep a little bit on exchange, but take control of the vast majority of it yourself. But yeah, do your research to do that safely. Maybe you want to use one of the third-party services that help you do that with multi-sig, such that you still retain control, but do have someone you can go to for help. So yeah, I mean that's just it's been great to see the development of these tools, and I just recommend that people use the bear market to do their homework.
Fantastic. Well, Dan, thank you. That's been great. And listeners, go and find Dan. You can find him on Twitter @Robustus and the website casebitcoin.com. So, Dan, thanks again for joining me today.
Yeah, thanks for having me.